left side? I saw yours.
Yo, 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 what's going on, ladies and gentlemen? Welcome to the live stream. Welcome to the live stream. Welcome to the live stream. Make sure to hit that like button, ladies and gentlemen. Subscribe to the channel if you haven't already. You know the drill. It's a simple process. All you have to do is just press the like button. All you have to do is subscribe to the channel. Can someone give me a yes in the chat if you could hear me? Please type yes. Mic test 1, 2, 3. How's everyone doing on this fine, lovely morning or evening, wherever you are in the world? How is everyone doing? Is everyone doing good? Doing bad? Going through a divorce? Going through a breakup? You're doing crap? Come on, man. Cheer up, brother. It's just one day out of the 365 days out of the year. Oh, man. Hope everything's fine over there in Brazil. Good morning, good morning. Yeah, Ryan, I'm in Korea right now. Based in Korea. Some people think I'm from Texas or something. I don't know why, but welcome, ladies and gentlemen. Welcome to the live stream. Hope y'all doing good. Make sure to hit that like button. Subscribe to the channel if you haven't already. Sit back, enjoy some of that sweet tea that my wife made. Enjoy the hospitality. Sit back and enjoy the live stream, ladies and gentlemen. Sit back on live stream, ladies and gentlemen. We're gonna get started very soon. We're gonna do it. Do we hit 50 likes? Alrighty, we're gonna get started. Alright, ladies and gentlemen, let's get started. We're gonna go over Bitcoin. Yippity doo dah. We're gonna talk about how this whole correction is playing out. Yippity doo dah, yippity doo dah. Okie dokie, let's go. So we have a possible correction now being complete, ladies and gentlemen. We're going to be talking about how this wave 1-2 could be complete. Now, there is a possibility we discussed on a wave 2 in the making here after a diagonal. It's going to be a very interesting level here. There is the possibility of some kind of flat correction, but is that enough to justify the size of this wave 1-2, meaning that this diagonal here that we've been also observing? Are we looking for some kind of larger wave 1-2 pullback? Are we looking for depth? Are we looking for a shallow correction? That's something that's on the table here, and I think right now we're just still trying to confirm how this is all playing out. Now, we could say that this is a major termination point, depending on how you're seeing the corrective move to the upside, but right now, it's very difficult to do in real-time analysis, meaning that it's pretty difficult to find a confirmation whether we will be rejected at these levels. That could be part of, a larger transitional wave here. However, that's also on the table. Can we look for some kind of impulse move out of here? That's all going to be dependent on the next few weeks, next few months. I don't think anyone really knows what's going to happen. But we need to take it step by step, go from a top-down analysis, talk about what is the overall correction or the overall macro structure that we may be in. So if we look on the larger macro structure, you can see here, this is the narrative that I have been working in, where we were looking for just two possible scenarios. First of all, we were talking about possible WXY to the downside, right? but that didn't play out. And we had a WXYXZ as the second possibility. So we're now kind of shifting our overall focus into how this could be playing out. Now, what that means is we're looking for this level to be a major support level. However, the question now relies on whether these levels are even going to be retested, okay? Now, there is that possibility where we can retest these levels, but I don't think it'll act as support, rather as a transitional wave if we do reach those levels. So the overall macro structure, just keeping it simple here, ladies and gentlemen, it's quite simple in the sense that, you know, we have either a wave 1, 2, 3, 4, 5 that's now complete here, or if you're a bullish, or bull, you're looking for a 5-wave move into an extended wave 5, okay? Now, if we're working in an extended 5, we want the waves to be as shallow as possible, especially this wave 1, 2. Now, since we did have a clear 5-wave move up here, this is either leading us into a wave 1, again, or have our wave 5 placed over here. That's the only two ways that we're going to be able to identify whether this is a completed correction or this is a completed move of a wave 1. And right now, this is why my bias right now is sticking towards more of the WXYXZ scenario here. Now, arguably, we did retest the absolute, minimum expectation of this support level, since we barely touched. We didn't even touch it actually, but we were very close to touching it. Now, the problem here is there are some ways that we can say that this is just part of a transitional wave again. We can adjust this wave X and just say that this wave X here is in play, where we come up, retest these levels, and then we get rejected. But we run into a problem for one reason, which is that this here, as a wave 1, 2, there's a problem here, because now it doesn't have that right look for, or the size of it actually, of a wave 1, 2 being an extension here working for a larger 5th wave. So that resorts us down to what could be a bear market scenario, okay? Meaning that if you're seeing this as a 5th wave that's not complete, like this, you're now seeing a possible ABC move to the downside, okay? Meaning that this move here was a leading diagonal. So if we zoom in and talk about the bearish, overall bearish interpretation, this here would be completed as some kind of leading diagonal going into a wave A, right? Because we're looking for a larger ABC pullback of the macro structure, since we do have that completed 5-wave move to the upside. So in order to fit that bias, what you would have to do is label this move here as an A, B, and C. That would help the overall structure of how we can come up here, get rejected, retest these levels over here, major Fibonacci level at the 61.8%, and then come down for a wave C. That would give us that first leg of wave ABC. Now, the reason why we're falling into a rabbit hole here as well, because we're looking for a larger wave 1 of higher degree. This just seems too short of a bear market, in my opinion, retesting only, the 50 to 60K regions. So we don't want to even assume, and well, the only way we would assume actually for a continuation for a bear market is we need depth. When we're looking for a larger degree of wave 1, 2, especially if we're following the fractal nature of the larger kind of size of how this should be playing out as a wave 1, 2, especially if you're looking at the halving cycle, you need depth, at least 70 to 80%. I know these bear markets are getting shorter and shorter. However, a 50% bear market wouldn't, be suffice, meaning that this ABC here would mean that it's just too short in time. So you would also have to fall down the rabbit hole of assuming that this would have to be also a WXY in play. You see what I'm talking about? This would help achieve the depth of a larger wave 1, 2 if this was some kind of bear market continuation. This would be like pretty much the only way in terms of the simple approach in real-time analysis. Because if we go to the halving cycle, pull up the halving cycle picture here. Now, the original scenario here, as you can see, we have a 5-wave move for that extended 5th wave. However, if we say that the bear market is coming in, it would be really strange here because we don't have the length of, the previous cycles where the wave 3, 4, 5s, as you can see here, 3, 4, 5, 3, 4, 5, 3, 4, 5. The only way to suffice for that would be to have an extended 5th wave to help the same sort of fractal approach in terms of the actual, bull market cycles. So half of me says that we don't have enough of the bull market achieved because we don't have the, full slope of what happened in the previous bear markets of these 3, 4, 5s. And the only way to achieve that, since the bear market or the halving cycle happened earlier, or this bull market cycle happened earlier for this wave 3, it happened before the actual halving cycle of this 4th cycle. So that put this wave 4 here a little bit earlier and ahead of schedule. So this would have been shifted over here, right? These 3, 4, 5s. So again, the only way we would achieve that is a 5th wave. Now, the other side of the argument is, okay, bulls, you've already had your chance. We were ahead of schedule. We already went for that wave 3 to the upside. So the opposing argument is we should be ahead of schedule for a bear market now. And that idea is also, that's pretty objective. I mean, there's not really any subjectivity behind that. It makes sense because if you say that it was ahead of schedule, then it just typically means that you were ahead of schedule for a bear market as well, meaning that it should come earlier and this would be a completely different cycle in itself after this 4th halving cycle, right? So in order to achieve that, however, you need to be making a slew of assumptions because just a single ABC doesn't meet the expectation of the depth of a overall bear market, right? And the second way to approach it would be this, a WXY. But it would be very unwise for us to assume a complex correction this way ahead of time since we only have the wave A. That's all we have. So it wouldn't really make sense, in my opinion, for us to just say that we're working for a wave W. I mean, we don't even know what this wave B is going to be playing out, and you're also assuming that this B wave is going to be rejected. So you see there's a problem here. You have to, you have the whole checklist, you have a whole checklist being made out, but we're only on the first check, and you need, 4 to 5 extra 6, on the list to be checked off in order to even confirm what could be a possible larger pullback to achieve that depth. And I don't think that we have that whatsoever. Right now, there's just far more evidence that this here was the corrective move in itself that's part of something else, meaning that we're part of what could be that extended 5th wave to the upside, right? This one here. It just makes a little bit more sense in that regard where this here was just far more, there was a lot more corrective overlaps, a WXY said, and we now have a protected bottom here. So it's more about the organizational skills here, right? We can sit here and assume, of course, validity is a very key point. However, just because, the Elliott wave theory provides valid scenarios, I think a lot of people fall short because they don't have the organizational skills when it comes to aligning the market psychology. What is the market seeing? What is, the general technical analysis also approaching? Usually, of all those things, they usually just put emotion as their number one thing because they have a specific bias that they're trading. And for me, trading emotions is very dangerous. It would be easy for me to just say that we are going into a bear market, be bold and say that it's going to happen. Because again, we do have that whole criteria that we could be, having. And if we only have one of those, checked off, then I have to be assuming that, the rest of the checklist has to be coming into play. And that's a pretty dangerous assumption. Now, that is the reason why I think we are most likely working for this scenario here. Even though it is quite ambitious, it's just the more fitting scenario. Now, there's other ways we can look at it. You can say this is a 1-2, a 1-2, a 1-2, 3-4-5, 3-4, 3-4-5 to the upside. But that would be leading us into $600 to $1 million per Bitcoin. That just doesn't seem like likely in this overall cycle, right? So for me, I would, just with the balance of probabilities, with the balance of, expectations, making sure that we also have the right ambitious mindset aligned with a balance of all the evidence taken into consideration, this idea just seems to be the best fitted scenario, because you're also taking into account of all the internal structures quite nicely. You're taking all of the respective time frames in mind as well, because with the top-down analysis, this being the top, and then once you start going into the medium time frames, this WXYXZ, you can argue for it and against it. However, there just seems to be more for it than against it, so that checks off. And then on the shorter time frame, since we were talking about a leading diagonal going into wave 1, that also is playing out. So there's all these micro time frame confirmations that's also helping build up the medium time frames. That's also helping the overall timeline of how this macro structure is also playing out. And in my opinion, it just seems like it's more fitted towards a channeling idea here, that we're working for a larger extended fifth wave to the upside. I feel like markets aren't ready to sell off. I think we're just more of in a limbo state, meaning that we're all just sitting on the sidelines more than anything else. I think people would be happy to re-enter the markets at a higher level for a confirmation. I feel like they are taking a little bit too much of a risk here when we're talking about smart investors. And then retail, if they're doing most of the work now and they're taking the most risk, I think at a later stage where the order books are still thin, I think a lot of people will find that confirmation interesting, and then we can continue that wave 3 to the upside. So that's how I'm seeing it. I mean, of course, everyone has their own, views. There's nothing wrong with it. I think we can all just say that we're working for a wave 3, 4, 5 to the upside. We can all, assume that this fifth wave is in. And again, like I said, the only bear market approach for me would be to say that this is going into a leading diagonal. So if we zoom in and talk about how that's even achieved, you can see here, due to all these corrective overlaps, I don't know, I just don't feel like this is the case. But even with this case, you're running into the problem of, playing with your emotions again, because it's still calling for higher levels of around the 61.8%, right? And, we can also talk about this being some kind of flat structure as well. That arguably is actually possibly better if I were to actually, create it. If we said that this was an ABC here, this would be a wave W, and then this would be an X, and this would be a Y. But then again, that doesn't achieve the depth that we're looking for. It achieves the depth of possibly of a 1-2 of a higher degree, of some kind of internal degree. But again, it's too large for the micro time frames, but it's too small for the macro time frames, especially if you're going to be working for, some kind of last move here as an A, B, C to the upside for a wave X get rejected. So you can see the micro time frames supports this idea quite nicely when it comes to the actual symmetry and the geometry of it, right? And that would be the overall approach for how this was playing out. But even with the least probable scenario here, I would say that it's still calling for higher levels, right? I think that we have some residual liquidity left at the $100,000 levels that we need to be retesting. So what does that mean? How do we reorganize this scenario? So that brings me into the shorter time frames, the WXYXZ scenario, right? Which is this. It just seems more fitted, and we still have time to work with that corrective hybrid overlap of working for higher levels, right? So what does this mean? Well, we have this leading diagonal going to wave 1. I would say that is the most likely case here. Now, this wave 2 here can be completed, in my opinion. I think we do have the possibility of this being a flat idea, meaning that if we are able to break above this level here of this previous price extreme at wave B, I think we could be working for higher levels. That's without a doubt. Now, the ultimate confirmation is, of course, going to be this previous high over here. But I do think that eventually we will retest those levels. So if we need to make any adjustments to this diagonal, if we're seeing something completely different, then we can always adjust this, especially if we come back and retest these levels over here. Because right now, from a Fibonacci perspective, in terms of how this actual level is actually been playing out, we only met the 23.6% Fibonacci level, which is arguably the most shallow retracement that you can, technically have for a wave 2. So this wave 2, in my opinion, I would say it is possible if we are able to work up like this. Say that, we're having a wave 4 or 5 coming into play, 3, 4, 5. Then we'll get a larger 1, 2 pullback and so forth. That will just be part of that larger 5th wave extension to the upside. So that is all in together for what the expansion phase is going to be, providing us. So Bitcoin is actually pumping right now. Kind of interesting. Yeah, we're back above the median range. We're above the 50% range, I think, right? We should be retesting that 61.8% level of this move down. So there's still a lot of buying pressure here, ladies and gentlemen. I think that even if we came down to the 61.8, all we have to do is, adjust this in a way where we're working on a larger wave 1, 2. So, the strategy is pretty simple, I would say. I mean, everyone has their own strategy, which is a DCA strategy. If you're using just Fibonacci levels at this point, trying to confirm a wave 1, 2, I think that's really the only approach that you could be taking here from a wave theory perspective. Don't want to complicate it too much, right? And I think these days, the wave theory has become increasingly subjective, meaning I think a lot of people are more divided than ever on which wave counts are going to be correct. This is why I work alone, ladies and gentlemen. I don't really take other people's advice. I listen to a few peers here and there, and even my students and my clients are mostly aspiring Elliottians, and I find their counsel to be a little bit more enticing than the people who may be professionals here in the space, because it's just far too complicating. People are complicating a little bit too much. It's just a lot of back and forth, a lot of indirect fighting. A lot of people are talking back and forth with each other, not indirectly, I would say, but we're seeing a lot of people, fight with each other because they don't agree with a certain count. And that's why the Elliott wave theory falls short in that sense as well, because there's so much subjectivity going on. So keep that in mind. Just follow what your instinct is. If it's valid, make sure you're able to narrow it down as best as you can. Use organizational skills. There's not much real critical thinking involved in this. That's why we have the market psychology to help us. I think a lot of people don't apply market psychology. What is the market stance right now? What is the fundamental news approaching? I think a lot of people say that fundamental news is not really even an important aspect of the wave theory, and I completely disagree with that as well. So you can see it's even divided even more. There's this huge divide between a lot of Elliotticians as well. So with that being said, I think that it's pretty objective that this whole move down was really corrective. We don't have any indications of what could be an impulse to the downside. We can't find any 5-way move. Over here we could have assumed that this was a 1, 2, 3, 4, 5. But at that stage, we didn't. I mean, even that got invalidated. We've been creating these lower lows. So again, this is why we need to be focusing on what is the most approachable scenario and everything right now. Since we have so many corrective overlaps, a lot of WXYs, a lot of ABCs going in between, it just seems best fitted as a triple correction here, which is a triple zigzag as a WXYXZ. That's why I think this idea is just most fitted, and you guys already know, I already went over the top-down analysis, that this is just part of a wave 1, 2. Don't focus on these regions too much. I think this level here of a 1, 2 pullback is still in the works here. If we break above these levels, easy is a confirmation that this wave 1, 2 is in as a possible flat idea. But again, going back to that bear market scenario, even this is already starting to fall apart, because this here was a leading diagonal most likely in this case, right? Because you need an actionary wave off the lows after some kind of larger termination point has completed, right? We have some kind of diagonal being played out here if you're working for a more bearish scenario. So we'll see how this plays out. I really don't want to say that this is some kind of double correction or some kind of WXY, because it's difficult to fit this into a larger transitional wave, ladies and gentlemen. You really want to fit with, you want to ask yourself, is it an actionary or is it a reactionary wave? Right now, you need an actionary wave here, and then you need to figure out how the reactionary wave is going to be applied after the actionary wave. So that's how I'm seeing it right now. I think right now, It just seems best fitted for a more bullish approach. It just seems like we are working in some kind of flat structure, and if we do move down, I still do think that these levels are going to be supported. Very important levels to be supported. You know, I feel like just the 23.6% level, if we focus too much on saying, oh, that's just too small of a pullback, man. You know, the 23.6% is the minimum expectation, but we're on a lower degree, first of all. Yeah, I do agree. I don't use the 23.6% as often. And then we have the 38.2%, which should be arguably the most important approach. So you have this back and forth on the micro time frame. So how do you mitigate that? Well, you do have that DCA approach where if you don't have enough confidence to enter at the 23.6%, at least you know you'll have some, you know, sizable, approachable confirmation levels of the major fib levels at the 0.382 and the 0.618 for Fibonacci levels. These two levels, in my opinion, are very, very important for support. That also still gives us a relatively good size and time against this diagonal that has played out in the past week or two, right? So there's no problem with the size here as well. We do have a pretty nice completed flat wave here as well. So we'll see how this plays out if we actually do break above these levels. In fact, I think this could even be turning into what could be a 1-2-1-2 scenario, right? I'm not sure if that's the case, but you know, we can be creative here, but we don't want to be too creative. You know, you could really say this is a 1-2, and then we're working for a massive 3-4-5 to the upside. Say that this was a 1-2, you know, of an intermediate degree. And then also we're working in, now we're working in what could be the minor degree, which would be this. This would be even a far more bullish approach, right? So you can see I'm not a full-on crazy bullhead here. I'm really giving the most approachable scenarios with the most rational way of approaching the price action that gives us the best balance of probabilities, right? So this is a possibility as well. I just don't like sharing this idea because it'd be way too many nested structures, but you're also working on the micro time frames and you're assuming some kind of problem here. This would I actually fit into that WXY scenario here, or that ABC scenario. If you're working at WX here, this would be the A, this would be the B, and the C wave would possibly be best resolved this way, right? Because you want to be looking for an impulse anyways. With that diagonal scenario, you're kind of playing with fire because you also have to assume this move here is going to be the finisher move. So that's the overall approach here, ladies and gentlemen. I feel like this way of, you know, seeing Bitcoin is just the best way. Now let's talk about the questions. Let's see. This is a very good question. Mortiza is asking, how can we distinguish a wave 3 from a wave C? So those two ideas actually do overlap with each other. So if we pull up this here, let's say that this is a wave 3, 4, 5, and a correction move is a wave ABC. This does have a lot of overlaps. A lot of people, you know, even we as Elliotticians have a difficult time whether it's going to be distinguished as some kind of ABC or some kind of three-wave move to the upside. The best way to do it, of course, let's just assume that, you know, the 61.8% has, you know, this wave 1-2 has played out. We can use the Fibonacci extension here from this pivot to measure our wave 3. Usually the most common target is going to be that 161.8%, right? So let's say that this is in. This here would be the most easiest way of just identifying this as a possible wave 3, because if it goes past the 100% level, then you know for a fact that it increases it by threefold that you're working for a wave 3. So if this level breaks, this 100% level, you know you're not working in a corrective structure. This here would be most likely reaching towards that higher level, that 161.8%. So how would you do that for a corrective structure? How would you assume to assume it in real-time analysis? Let's say that this right here, let's say it's an ABC structure. Let's say that the same retracement happened down to the 61.8% for wave B. How would you measure it? Same idea. You would go from here to here to here and assume that the 100% level is going to be a rejection for you, right? This would be a more ideal way of seeing it as an ABC to the upside. So in real-time analysis, let's say that the price was actually trading at the 100% level. How would you assume, okay, I need to know right now if this is ABC or a wave 3 continuation? First of all, you can't confirm it, but you can make assumptions. You can de-risk at those levels. I would say the best approach at these levels is to de-risk your positions, right? You know you can see a possibility of going to these levels over here for wave 3, but at the same time, you do know that this is going to be a strong rejection point. So if the markets are still on the, the side, there's a low volume, this would be a very good time to start taking profits. You can start assuming that these levels here are going to be acting as resistance now. So if this price were to come back down like this, then you know for a fact that this was a completed correction. But let's say, price was stalling around these levels, at least you can still take profits, and, secure some of your money here. That's very important in this market. And then if it, continues up, then you revert back to this one over here, assuming that the move is going to be impulsive rather than corrective. But we also do run into the problem. The 161.8% level is a level that you're still going to want to take profits no matter what. Absolutely, because as you can see here, this here is a maximum level for, or the most, approachable, that is, level of a wave C as well. So you definitely want to be taking profits on that wave 3, and then whatever pullback happens, because this can also still technically be a wave ABC to the upside, meaning this could be an A, this could be a B, this could still be a wave C, and you can still go continuing the trend to the downside. But at this stage, this is where I like to call it wave 4 level, as an observation level. You really want to be a level here to be observing more than anything else. I would say those levels are going to be the most critical levels to be watching. So that's how you should be approaching it from an ABC perspective or a wave 3 to the upside perspective. Let's see. On April 18th, 40 million Trump tokens will be unlocked. Will that have a negative impact on the market or the meme coin itself? Would you mind looking at his chart through an Elliott wave analysis? I'm not going to look at Trump coin specifically. I don't really care about Trump coin. I don't know what that coin is even about. All I know is that it went down 80 to 90%, and rest in peace. Let's see, any other questions? Do we figure out the wave degrees? I have difficulty break down which degree wave it is. Hopefully I answered the question, brother. I did a pretty thorough top-down analysis for you, Yusuf. So I would definitely rewatch this video if you are having trouble with that. Flat idea, B waves could be the bias because tariff will come back by July. What do you think? Yeah, I mean, if there is like some kind of major event that aligns with the timing of a B wave of a flat, it can indicate some kind of fake out. Definitely, and that's what flats are, designed to do. Usually you'll see, very interestingly, when a flat plays out like this, you'll have this inflection point for this wave B. Usually you'll see a lot of news-driven points here as well, which is, very interesting for these B waves. So something to keep in mind. I don't know what's happening in the next few days or the next few weeks, but I think the news is pretty much priced in, man. From a macro perspective, I don't think people are reacting to what's happening with the Trump news these days. It might be wrong. I don't know. I have no idea. But what do you guys think? Slimmy is asking, is there any volume guideline or hint to distinguish between a wave 3 and a wave C of an expanded flat, which can reach the same 1.618 and follow up on Mortiz's question? So a flat idea... there's no real way to indicate volume. I think volume more pertains to a triangle idea more than anything else, since it contracts and you're looking for a breakout, whereas a flat pattern, you're looking for equilibrium. So let's say that you do have price action playing out as a flat. Let's say you're having a 3-wave here, and then you have another 3-wave here, and then you're expecting a C wave. The only real confirmation is to look at your preceding waves. So if you have your wave 1 here, or a wave A, first of all, you're assuming that you're working in a sideways correction, right? So you do know that you have a higher wave 1 or a wave B or a wave 2 or sorry, wave 1 or wave A confirmation, and let's say you do get a 3-way pullback, right? Maybe not necessarily in depth, maybe just kind of in that sweet spot where you get a pullback, and then you start seeing a little bit of strength coming into the markets, and let's say that the overall move here is a 3-wave in itself. So if you know that this move was a 3-wave move, that's the first confirmation that you're going to be making, and then you can use the Fibonacci retracement from these levels here and measure it from that 123.6 to the 130.2% level, and that will be another level of interest for a lot of people for a B wave. So that, in my opinion, is how you're going to be creating either wave 2 or wave B, and then you should be continuing to the upside. That's how you should be doing it. Hopefully that was helpful, man. Now, Eric, you have talked about BCH, what makes you so bullish on it when it clearly shows no trend pattern on linear scale for the past 8 years. I mean, same thing for XRP, same thing for Litecoin, same thing for a lot of other coins, man. Crypto, I think a lot of people really misinterpret how the linear chart is supposed to work. Linear chart only shows the exposure or the extremities of a certain time frame. You know, if you go back to Apple in its early days, the reason why even the linear scale works is because of time. If you have, look at this, you can see there was a time where it's just flat, you know, for the 20 years or so, right? I feel like if there's another expansion phase coming up to the upside, then you're going to have that similar approach no matter what, because if you start zooming in, you know, these levels here start to look extreme as well. As you start to zoom out, you can see here, it starts to get more extreme because of time. So that's why you need to be very careful here about using the linear scale. Linear scale provides good analysis when it's needed, especially on the weekly time frame when you're looking for what could be a larger pullback. But yeah, I do agree to an extent, you know, it could give you a level that, you know, on the shorter time frames, it could show very huge extremes in the price action. But, you know, same thing with Bitcoin, same thing with a lot of other coins. It's just doesn't make sense when you're looking at it, right? If you look at the crypto chart, Bitcoin is showing the same idea, right? You have a problem. And it's exactly the same idea here with Apple. You can see a very long time here where we saw a huge gain here, and then we saw a huge pullback. And then as time went on, it got more extreme, where this can't really give you a clear picture of the wave counts, right? So a linear chart it's useful, but as time goes on, as the markets oscillate with each other, as people start to come into, you know, the markets, people are positioned quite differently. And that's why this logarithmic chart provides us with a fairer idea of how the markets are playing from a percentage perspective, right? Because it provides all of the price analysis in a more logarithmic way. Same idea for XRP, same idea for Litecoin, same idea for Bitcoin Cash. That's how you should be looking at it. What do I think of Litecoin now? I'm still pretty bullish on Litecoin, man. It's still working in a larger triangle. There's really nothing that has changed. A lot of these coins are still providing pretty fair value pricing, in my opinion. I think we're still working in what could be a larger consolidation. You know, what's a few weeks of a correction going to do to us? It's not really important, in my opinion. So yeah, ladies and gentlemen, hopefully that was helpful. That's the overall approach on Bitcoin. I will see you guys in the next video. We're going to keep this live stream a little bit short. Thank you very much. Oh, make sure to hit that like button. Subscribe to the channel, ladies and gentlemen. We also offer a Discord membership, so if you're interested in joining that, please do go ahead. Patreon as well. I will see you guys in the next video. All the links are in the description below. See you next time. Have a fantastic rest of the week. Bye-bye.